The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Tuesday morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN, 9:06 a.m., 24 minutes to go until the start of trading, and we got markets picking up where we basically left off for the immediate near past. Higher prices across the board, folks. We're pushing near all-time highs across the board right now. You get the S&Ps up almost 9 points at 42.34. You see the accelerations we had this morning. So let's jump to the big headline out there. I didn't experience it myself, but I know it was pretty prevalent across the board on the internet. Websites across the internet temporarily unavailable, including the Times, Bloomberg News, Reddit, even had the UK government out there. Fastly says they have fixed the outage that took down a swath of the internet, saying they had fixed that basically early this morning. 7:09 a.m. They identified a service configuration that triggered disruptions. Talk about disruptions. And I guess what they do is they route internet traffic for the fastest way possible. Technology is one of a handful that act as a high-level website and application hosting service that large enterprises use to serve content to millions of users simultaneously. And the fault shows the reliance that the most popular pages on the internet have a few big tech firms to help them distribute content and host users. So rather than hosting all website content on a single set of servers in one location, Fastly puts cloud infrastructure in dozens of locations to let people download from a server closest to them. It's all about speed. FSLY is their symbol. They're probably thankful that they seem to have gotten things resolved pretty quickly. You see the acceleration, not even too dramatic, right? From 51 to 47. Not bad when you consider you're just back to basically the early prices we had yesterday before we accelerated higher, considering you're going to be the talk of the day when you got sites like Bloomberg surveillance getting shut down. Bloomberg's a media network. Of course, they're going to talk about that they can't basically push out media. The story gets out. Nonetheless, I mean, not down dramatically at all. We're down less than $2 right now. But you see the acceleration in the markets. The market's happy that the internet fixed. 42.34, a little bit of fear in the market there as we had some website outages in a pretty dramatic fashion. But nonetheless, the markets bounce back and we push above pre-market session highs at 42.34. Check out tech stocks, up more than 0.5%. We're pushing near the all-time highs. We're at 13,880. Apple had their Worldwide Developer Conference yesterday. We'll take a look at Apple real quick. We'll go over some of what they talked about yesterday, but Apple's up $1 overnight. That's quite a number, folks. I talked about this yesterday. I think Apple's got 16 billion shares. What are they at? 16.7 billion, we'll call it. So they're up $1 overnight. They've added about $17 billion in market capitalization since 4 p.m. Eastern time yesterday. Not bad. But tech stocks higher today. We got lower yields in a big way. Microsoft shares, John. There we go, up to 255. Microsoft's up almost $2. Same thing, up almost 1%. Now, Europe, DAX is up about 1% right now. FTSE up about 0.5%. I mentioned the bonds. I mean, we're going to be flirting with a 1.4 handle in the 10-year. And that was after being at 1.6 and change not that long ago. Taking a look at the move. I mean, this is driving a lot of the action, especially in the tech stocks right now. You got the 10-year up 10 ticks right now at 132.13. But check it out, folks. I mean, we rose a point, an exact point from 131.18. That's where we came into the jobs number for non-farm payrolls. We get a number that's pretty light. That lets us all understand that it's going to be a long road ahead to get these jobs back. Seems to be that Chairman Powell is most concerned with employment, right? Full employment. That's the Fed's mandate. Full employment. They need to make up those 8 million plus jobs that we should probably have on the payrolls that we had prior to COVID. You trade up a full point, because guess what? Interest rates, the Fed is not going to hike them too fast. Now, we're going to talk about a couple things, though, because there's a bunch of different influences going on there. You go from 131.18 to 132.18. As I mentioned, the 10-year now back to 1.53%. We were flirting with 1.67, I think, 1.63, something like that. Now, you put this 10-year on a 3-year weekly, okay? We're looking at a weekly. I've talked about this in my newsletter, Rocket Equities and Options. You drive from a price point of 117 back in October of 2018. We reach a high during the depths of COVID at 140.24. We've now based, and it's really interesting, since March 1st, folks, we've been sitting right at about the 382, which also correlated to the high area. This was an area of resistance back in September of 2019. Now it's become an area of support at 132.12 as we got the 10-year sitting basically right at about 1.5% right now as we sit there. We get CPI data on Thursday. That'll be a big indication because the battle here is that we got to make up the jobs. But if we have rampant inflation, that's going to be a factor the Fed's going to have to address. So CPI data on Thursday, likely to weigh in this a big way for sure. And jumping around, I mean, some of the articles already that I have up here, right? You have Steve Leisman. He wrote something, so this is out when? Yeah, yesterday. But interesting, talking about Feds in the early stages of a campaign to prepare markets for tapering of its asset purchases. Talking about comments over the several weeks, the discussion in terms of when they're going to start talking about that as soon as next week's FOMC meeting. It'll take a couple months. Nonetheless, it's going to happen eventually, especially if we start to creep in with inflation. And article talking about from yesterday, Deutsche, they're warning of global time bomb coming due to rising inflation. Out of consensus forecast, but they're warning of a potential crisis coming from inflation. It's a risk, folks. It might be a tiny one, but the market not really pricing in too dramatic of a fashion in terms of if the Fed sees dramatic rising inflation we're not expecting, and if is not transitory, then they may have to raise rates, or pull back some of the stimulus they have in terms of bond buying, right? They might have to taper a bit to try and ease some of that rampant inflation, even if we haven't made up the jobs yet. That would be the battle there when those two start to coexist in terms of not quite climbing back to the economic numbers we wanted just yet, and nonetheless having inflation. And the Fed having to say, wait a second, maybe we do have to ease up on part of our stimulus because it's just rising too fast, even though we're not creating the jobs that we wanted just yet. Nonetheless, we'll see how it plays out. But bonds sitting right there at about 1.5, that level, a critical area. We break above or below this area, watch out, because guess what? We break below that area, and you could call it the 50%, would be 128. That's a solid, basically, what is that, 3.5 points? Yeah, 3.5 points in price. That would be your next stop at 117, could be. You might see some rising rates in a big way in this environment when you have basically nothing in line. We went straight from 117 in October of 2018 to 140.24 in March of 2020. You're talking about only about 16 months that run, and we're sitting right at 132.13 right now. All right, jumping around back to the markets, we'll take a look at the S&Ps. We had that thrust to lower prices, basically right down to the lows we had on Monday, also down to the lows we had Sunday night. And this morning, we're pushing the highs at 42.35. As I mentioned, only about 3 points away from the all-time high print on the S&P. The Dow, you're talking about a print. You back things up on the daily, 14,064. And that's the NASDAQ 100. And the Dow, the easy one to remember, 35,000 we'll be looking for. You jump over to the VIX this morning, volatility index with a 16 handle, right? Look at the 15-minute. Now, that spike, not sure that's a real spike there on 15.15. Sometimes you get these prints. Maybe a trade goes through. Probably not a real reflection of the bid-ask there or how that's calculated. Nonetheless, 16.29, low volatility in this market, and rightfully so. As I discussed, we're talking about all-time highs basically on the 4 indices within reach as we kick things off on June 8th trading. Stay tuned, folks. We'll be coming back. We'll be talking with Kevin Hinks of Thinkorswim. Fast market right after this break. Stay tuned.
Golden ratios give shape to everything in our world, represented in the Fibonacci sequence. These special numbers define the patterns that make up our universe. Not even markets can escape the omnipotence of these ratios. Larry Pesavento is a 45-year market veteran who has published nearly a dozen books on the powerful patterns we find in nature and their relationships with the ever-elusive markets. Larry's newsletter, Fibonacci 24/7, will teach you to harness the power of these natural golden ratios in order to create successful trades. Fibonacci 24/7 is designed to teach the tools you need to identify and act on these undeniable and reoccurring patterns. Sign up for Larry's newsletter, Fibonacci 24/7, and you will also receive free access to his trading webinar, Trading Strong Trending Markets. Try out Larry's newsletter risk-free. All of TFNN's newsletters come with a 30-day money-back guarantee. TFNN, educating investors.
What's separating you from the most successful men and women on Wall Street? That's right, information. Having all the information gives us the perspective we need to place the right trades at the right time. The TAS Profile Scanner is the premier market profile-based scanner. Powered by its acclaimed TAS proprietary algorithms, this feature-rich scanner instantly filters over 2,500 plus global financial markets, such as stocks, ETFs, commodities, futures, and Forex. This powerful suite of tools leverages instant trade filtering and strategy formulation to show you emerging trades before they happen. For a limited time, you can save $100 off your first month by using the promo code UPGRADE. And you still get a 30-day money-back guarantee, so you have nothing to risk. Level the playing field with the TAS Profile Scanner, which you can find under the Services tab at TFNN.com. Sign up today.
Hey there, I'm Andy Arbertine with Tiger Precious Metals and Stones. Whether you're looking to buy and sell precious metals or trying to find the perfect diamond ring, I'm here to help. I have over 15 years of experience with diamonds and precious metals. You can call me directly at 727-329-8245, and I will personally answer any questions you have and help you find exactly what you're looking for. I will be your personal concierge in the metal and stone business. Give me a call today, 727-329-8245.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
Welcome back, folks. We have the S&Ps up by 9 right now. Tech stocks, NASDAQ 100 up by 75. The Dow up by 19. Russell up by 8. Positive prices across the board. Let's jump over to our man, Kevin Hinks. Folks, every trading day, 11 a.m. Eastern time, right here in Tiger TV. Fast Market on the TD Ameritrade Network. Kevin Hinks, Alex Coffey, and the team breaking down hypothetical trades. And we got a little bit of a lull in earnings season right now, but they're still setting up the trades, folks. A great program yesterday. We were talking a little Target, a little Walmart. Kevin Hinks, good morning.
Yeah, good morning, Tommy. Yeah, yesterday was an interesting day. And yesterday was an interesting day because today Target just got a big upgrade. So all that presentation that we did yesterday led into a big upgrade today of Target.
Listen, it's great you brought it up, man. And I'm sure I was going to mention it. And Target, we have the chart up here, Kevin, on the Thinkorswim platform. We're up at about 234 right now. Yesterday, we closed it out about 230.89. So I know you guys are always setting up hypothetical trades on Fast Market. Yesterday, you were looking at Target and Walmart. You were looking at trades in both of them. Can you just talk about a little bit, Kevin? Because I love what you guys are doing. You're saying, you know, you have the classic trades that you can set up, whether it's spread trades, whether it's iron condors, right, et cetera. But then what I love that you guys do is that you teach beyond the simple stuff, and you're saying then how can you put your own little twist on it maybe, right, in your own little personal bias of what you're looking at and how you tie that into the trades that you're setting up.
Yeah, I mean, what we do, much like a baseball spring training or a pro football training camp, even though, you know, those people are professionals, what do they still do? They pound the fundamentals. And that's what we do on our show. Now, once we take those fundamentals, we show you how to tweak them based on your attitudes and your talents and your individual opinion of a stock. You can trade a range-bound strategy like an iron condor, but give it a little delta, right? Lean it a little bit to the long side or lean it a little bit to the short side. You can trade a calendar spread or a diagonal and give it a little more attitude with maybe the diagonal version of the calendar spread. You can do a short put vertical or a call vertical and give it a little more attitude based on where you put the strike price, how wide you make the difference between the two strikes. There's fundamental ways that every trader should know, and then there's the way that you tweak to make it a little stronger, a little more passive, a little more aggressive. There's a million ways, and when you combine the fundamentals, like ground balls and blocking and tackling, with your individual talents, hopefully things will get better, and you'll start to, what we like to refer to as, swing at strikes. Tommy?
Listen, I love it, man. I learned so much because when you guys walk through, just those subtle shifts, Kevin, because there are a million ways, as you said. We all have our personal biases that go into each trade, but you always have the option, right? You can be buying volatility. You can be paying the premium and setting up a debit spread. You can be the one collecting that premium and pairing it depending on your market bias. I thought it was a great trade setup. You guys had a bullish setup in Target, of course, that we mentioned. Yep. Today it's up $4 already. I have some Target, great stock, man. And I love the way you guys are talking about it. I couldn't agree more. Just the sentiment stuff that went along with Target and Walmart. And I think Alex Coffey made the great point. He said that his girlfriend, I believe it was, or said that, they have a Target moving into the neighborhood. And if it was a Walmart, would somebody even mention that? And I thought it was so true. I completely agreed. The brand that they have, we have Target. I got one right down the street, man. But that was a great trade setup. The one other thing, Kevin, I wanted to talk about real quick that you guys were talking about yesterday that I loved was on the Thinkorswim platform, which I hadn't even used, was applying the columns in there for the probability of touching a strike price, and then the probability of whether it's in the money or out of the money. I have Target up here. I just have some arbitrary levels. Now, these are numbers where Target closed yesterday at 230.89. But could you talk about just a little bit, because I thought that was so cool, those percentages of probabilities of a strike price and the probability that the price will reach that price or even finish in the money or out of the money as of expiration right within the Thinkorswim platform there.
Tommy, the three pillars that we use to talk about trading in 90% of the instances is we want to be collecting data, we want to define our risk, and the third is we want to trade high probability trades, right? So if you're trading just one trade and you're looking for a home run in a name, that's different. But if you're making 2 or 5 trades a day and 25 trades a week, you've got to trade probabilities. So we teach people, and there's a column on the Thinkorswim platform called probability of out of the money. And it's the probability that that strike price will finish out of the money and go out worthless at expiration. Now, there's also a column that says the probability of touching. That means a different thing. That means what's the probability that between now and expiration, it gets near there. It gets up and touches that strike price. Doesn't mean it's going to close through it, right, and close in the money, but it's going to go up and threaten one of those strike prices. So it just gives you a more granular look at the probabilities, because at some point, if you trade these spreads, if you trade iron condors, the SEC's going to go towards one of your strikes, right? It's almost guaranteed. You've got short strikes on both sides of the market. So we just break this down to pure math and probabilities, Tommy.
And what I especially loved was just the two of them available, right? Because it's one thing knowing, tell me the percentage of the move expected for the implied volatility, how often this finishes in that date. But the fact that you're going to know, as you guys put it yesterday on the program, tell me how often I'm going to take heat where it's going to be in that level at some point prior to expiration. We all want to know those probabilities, man, like you said, because you run a scenario enough times, the numbers are going to play out in the long term, folks. That's why you need the probabilities in your favor, because they come from the numbers that play out in the long haul. You know, those averages, they call it, was it regressing towards the mean, right, Kevin, to the average? Those probabilities, they do play out. It was a great program yesterday, Kevin, especially no earnings going on. But guess what, folks? There's trades everywhere still in this market if you have a market bias to go with it. So with that in mind, Kevin, what are we talking about on the program coming up at 11 o'clock today?
Today we're going to have some fun. We're going to look at Apple in the first segment of the show, and coming off their international show that they had yesterday. And then we're going to look at a comparison between Nike and Lululemon from Likefolio, and then we'll trade both of those today.
That's great. So yesterday it was Target and Walmart. Today we got Nike and Lululemon. Kevin, we look forward to the program as always, man. Folks, tune in to the great education you just heard here every day at 11 o'clock. We look forward to it at 11 o'clock, Kevin. Have a great one, and we'll talk to you tomorrow, man.
Thanks for having me on, Tommy.
Thanks, Kevin. Take care, man. Folks, tune in. You heard it there. Great trade setups, just talking about everything. I trade options. I still learn something on a continual basis, checking out that program every day, setting up those hypothetical trades. I mean, in the money, probability of touching, all of that stuff. Very important. Premium implied volatilities in that options market, of course. And back to the equities market. We're sitting right where we were coming into the opening bell. We got about 3 minutes right now, 3.5 minutes. We're going to come into this break. We'll be on break for 3 minutes. We'll be right back at 9:30 for the opening bell. Give us a call, folks, 877-927-6648. What equities are you taking a look at today? Give us a call. We'll be right back in 3 minutes, folks. Stay tuned.
Are you having fun trading the markets but having trouble finding like-minded individuals to discuss your trading and investment ideas with? Become an apex predator in the trading markets and join the Tiger's Den Trading Room only at TFNN.com. The Tiger's Den is an exclusive trading room where successful traders from around the world come to exchange trades and ideas. Join the den and surround yourself with the sharpest minds in the trading world. Subscribers to the Tiger's Den are also the first to have their questions answered live on air and can privately chat with our TFNN hosts live during their shows. Interact with other Tigers and Tigresses as they share trading ideas, news analysis, and discuss the market action all trading day. Subscribe to the Tiger's Den risk-free with our 30-day money-back guarantee and become part of the TFNN trading community. TFNN, educating investors.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den Trading Room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We got markets open right now. We got the S&P pushing all-time highs. We're up 9 points right now, 42.34. You see the steady incline we've gotten to higher prices. Higher prices, 42.38. Always so interesting, right? We crawl up to higher prices, and sometimes we'll fall out of bed to lower prices. Those three red bars, we escalated from 42.38 down to a price point of 4,051. So basically about 190 S&P points. We climbed down to May 12th. It's almost taken us a full month to get back to those prices. June 8th, we're trading at 42.34. Not the first time. It's taken 3 bars in quick acceleration, right? You back things up. We had 3 pretty decent bars to negative prices here back in March. And also you back things up in October, right before the acceleration higher. You trade from a price point in the S&P. Remarkable when you look at those price tags. 34.46. We're down on October 29th. Why not? Let's go to October 30th. The real low, 32.25. You're talking about, how about 1,007 points above that price level in about a 7-month span, June 8th today. Okay, jumping around, what else we have going on? Stitch Fix out with their numbers. Interesting. I can't believe it's been 3 months. I remember the last time they came out with their numbers, saw their earnings this morning, and said, my goodness, it's been 3 months since Stitch Fix came out, because they really tanked last earnings season. They trade from about a price point of right where we are right now, which is so interesting. You go from about $69, you open up the next day, you're in about 50 territory, you trade down to a low just on May 10th. So you're talking about less than a month ago. This company was trading at 37.59, and this morning we're up 18% on their numbers. Taking a look at their numbers in terms of what they came out with, lost 18 cents a share. Smaller, though, than the market was looking for 27. Online clothing style companies' revenue came in above estimates. They also issued an upbeat forecast, always the most important thing. One of the things interesting, I remember their last earnings season. They do some serious numbers in a big way. The average revenue per user for the quarter, I think it's like $500 or $600, a remarkably high number in terms of the people that they're going after for that service. It would make sense, right? You got a delivery service for clothing tailored to you, especially during COVID, but nonetheless, they persist, and they're in higher prices so far this morning. All right, jumping around to other stories. Kevin mentioned it. Apple encroaching on Facebook's territory at the Worldwide Developer Conference yesterday. Now, this one's an interesting dichotomy here in terms of what's going on. Now, number one, you have Apple. Apple this morning, I talked about it. Yep, we're up 0.5%, so we were higher on the open. We were up by about $1. Apple has more than 16 billion shares outstanding, so that price alone, now we're up 70 cents. Let's call it $1 for simple math. $16 billion market capitalization, right? You take a look at Facebook. Facebook closes at all-time highs yesterday. Put this back on a daily. You see the acceleration. We're up remarkably $76 from where we were on March 9th, right? Blowing away that consolidation Facebook been in. You put this on even a 5-year weekly to really see the run. You're talking about pre-COVID, we're at 225. We're now sitting at 336 on Facebook, all-time highs. I bring it up because all the talk has been about the privacy ordeal, okay? And Apple going to make sure that Facebook can't track them along with anybody else. So Facebook, though, delivering those targeted ads, you would think this would be not a deal breaker, but a serious impediment to the type of money operation that Facebook has going on. But the market's just not seeing it, folks. All right, this is a weekly, and it's been a one-way rocket ship to the upside. We're trading at 336. You look at the acceleration we had yesterday, and yeah, we saw a little bit of a pullback, maybe at 1 o'clock during that WWDC, Worldwide Developer Conference, but nonetheless, we trade up yesterday from 330 to 335 on the day that you have Apple talking about those privacy concerns, several new features for iMessage and FaceTime. Now, here's the other thing, okay? They're going to have their own somewhat social interaction platform that they'll be able to allow people to use. Yeah, Zuckerberg's already said he considers Apple a major competitor, largely because of apps like FaceTime, iMessage, allows people to communicate. And you're going to have Apple now allowing people to share things within iOS itself. Interesting to see years down the road, not going to be immediate, but how that contributes. What you also have is you have FaceTime being able to use multiple people. Okay, that kind of eating into the makeup of Zoom. Well, Zoom was higher yesterday as well. Now, Zoom's pulled back dramatically. Okay, we had some big earnings back here in last August, accelerate to 588. Since then, we've been on a downward trajectory. You put it back on a daily to see the pop. We've risen from May 11th in Zoom of 273. We're at 345. The point being, privacy is going to be a huge deal in Apple. You can use, I think it's Apple Cloud Plus something. They have another service out there that will allow you to use a VPN-like privacy feature so that nobody can kind of track you on the web, et cetera, or know who's using it or where you are. They're really ramping up the privacy deal. I think they see that as an opportunity to separate themselves from the competition. The biggest one, Android, of course, as people valuing privacy in a huge way. My next story is going to be on Amazon. Today's the day that Amazon starts sharing your internet, folks, without even asking you. Okay, so Apple realizing these stories, they permeate throughout the internet because they resonate with people in terms of privacy. But the market's really not worried in terms of impacting the likes of Zoom or Facebook and how those may play out. Nonetheless, Apple shares, you've seen it up a bit. But, man, we're sitting in Apple at prices we've been at since last August. Still quite a valuation here with Apple pushing more than $2 trillion even today. Look at this run it's getting since I last talked about it. Look at this. The market liking whatever's going on here. The market buying that up at 1.25%. They just got, putting this on a minute, that just happened. Look at that. 933. This thing takes off from 126 to 127.50. And as I mentioned, folks, not easy to do when you have a float of 16.7 billion shares, I think it is, in Apple. Okay, jumping around to what other stories we have going on out there. We'll jump around. How about Southwest? They're ordering more planes from Boeing. The 737 MAX, the smallest one, 34 more planes. Boeing shares jumping over. Boeing, there's your acceleration, I think, on that news, up to 257. We give it back on the open, though. Boeing, putting it on the 3-year weekly, it's been a slow rise. We got some work to do on Boeing in terms of getting back to that level. Now, zooming in on the action here, all right, we'll just take a look, put a couple lines, because this is a nice upward trend channel line. Developed pretty much on the top and the bottom. Maybe you get a little bit below. I like to use almost a linear regression on my channels. You might get a little bit above, a little bit below, but you want the definition of a real trend of what's going on. And again, on the top side, where are we there? But as you see, 253 right in the middle of that. And I would expect, folks, that eventually this company is going to get back in the range of above 300. You're at 254. Even that's a 20% pop from where we are right now. Might take 2 or 3 years, though, because you look at some of the international airlines, and let's just zoom it back on a 3-year weekly to see prior to COVID. American, we're at 25. Prior to COVID, you were at 30. Delta, maybe the strongest one out there at 47. Prior to COVID, you were coming in at about 60. United Airlines, we're at 57. We came into 2020 at about 90. Okay, so they must have maybe had some exposure, whether it's in the Asia as COVID started to spread in the beginning of the year, really fell out of bed as it became a worldwide pandemic. But then you compare that to domestic travel, which is back even bigger than probably COVID. You got Southwest. There it is, up 0.2% today, 58.67. JetBlue, basically at pre-COVID levels of 19 and 11. Both of those domestic carriers, of course. All right, market giving it back a little bit right now. You pull up the 15-minute, a little bit of a drop-off on the opening bell. We get the S&P still up by about 3 points, but no record print so far. Falling from those levels, tech stocks holding up well, as I mentioned. Apple accelerating higher. We're going to take a look at Amazon when we get back. We're going to talk about why your Alexa device might be sharing your internet with the world today for the first time and how you can maybe opt out. Stay tuned, folks. We'll be right back.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. Right now we have the S&P, up about 4 points, and we get tech stocks continuing higher. Look at that, 13,907. We take a look at the weekly, 14,064. Again, the highs on those tech stocks as they push that level back to a 15-minute. The Dow, 35,000 is the number there, and the S&Ps were up 4 points. We missed the high by about a point, basically, just more than a point, 42.38. Okay, jumping back to as I mentioned, today's the first time that Amazon, all their devices, they're going to immediately begin, not an opt-out, they're opting you in immediately as they'll begin sharing your internet with strangers. Now, this is Wirecutter over here at the Times. They're talking about might not be as scary as it sounds, but they do a good job of showing you how to opt out if you want to, which is why I brought this one up in particular. That makes some good points. So by default, compatible devices will automatically have Sidewalk enabled. Okay, I turned mine off this morning. Today's the day that they start this process in terms of sharing a slice of your internet. So it's capped at 500 megabytes per month. That's about 10 minutes or so of streamed video, high-def streamed video, I believe. Crucially, though, you're never going to know who's using the signal. It's not like they're going to see your network like you do when you opt into a network here. But nonetheless, I mean, Amazon, it's pretty remarkable what they're doing when you look at what they have in terms of the number of devices they have. You have the Echoes, right? You have the Echo Dots, the Echo Plus, the Echo Shows. You also have their Ring Spotlight cameras. I believe the Tile is in there. Amazon's going to continue to add partner devices over time as they push those out. The Spot, the Echo Studio, all of those in a big way. The Ring, those internet gateways that they have, they got so many devices. And it's just remarkable that they can just turn this on, really. And you're going to see, I mean, but guess what? This is the battle, right? But what I liken it to, because I don't think anybody really realized that, you know, you sign away those terms of service when you set up almost any electronic device or account. But imagine if you just bought a device of any sort, right? Let's just say it's a children's toy of a Barbie doll, all right? And let's just say that Barbie sells dolls, and they're somehow connected, and guess what? You can tie it to the internet, and Barbie will react, and she's an alarm. And maybe Barbie and Ken, they're alarms in the morning, okay? So you tie it to the internet, you tie it to your Wi-Fi, you hit the checkbox that says, yes, I agree, and you tie it. Well, then a year later, okay, now this is just a hypothetical, but it's to illustrate how we're accepting this and how it's so crazy what's going on, I think, in my opinion, is that a year later, okay, Hasbro, I think, which makes Barbie and Ken, comes out and says, guess what? what we've done is we've pushed out millions of Barbie and Ken dolls to every kid for Christmas at a discount. And what we've really done is we've microchipped them all. You've connected them to your internet. And we're now going to turn them all on and connect a network of every single person's Wi-Fi network. And we're going to take about 500 megabytes of internet from you on a monthly basis at a maximum. I think the market would completely freak out, rightfully so, that everybody bought dolls. They never envisioned that you'd be using that network. Now, listen, I have Amazon shares, okay? It's brilliant what they're doing. This is where technology is going. The real problem here is that they're auto-opting people into a service that I think they probably have no idea about. If you're watching this program, you're probably more informed than the average person. People, we're traders. You need to be a mass of news that affects companies. Privacy concerns could affect a company like Amazon if there's some severe blowback to this type of a story. Okay, but most people aren't aware of this. They go throughout their life. They have to work and spend the time that. Maybe you have a family, maybe you have kids. You're not as abreast of every story of news. I think this story will take off a little bit as this persists. This is day one of that happening. So you may see some stories tonight even talking about that. But just think about that hypothetical, because in one aspect, you even have, the Times out here saying that why aren't they freaking out? Well, they're saying the first thing is that they've made it an opt-out service, which is probably what sits most unwell, right? That they immediately opt you in. If it was something that you had an opt-in ability to, then it makes perfect sense, okay? But they automatically opt you in, and they say if you want to opt out for the same reason. Most people are going to be uninformed and not aware that this is even happening, okay? It's the same way that Ring and another Amazon-owned brand has long forced device owners to opt out of its controversial neighbor service. Not familiar with that because I don't have Ring. But this one affects everything that they have going on. And again, I'm an Amazon bull, folks. The company is great, but just speaking for, things beyond the market that we do sometimes are important. People should be aware of this because this is pretty substantial in terms of the invasion that they have, that they're now just going to begin using your internet and sharing it across the board. Imagine the network that Amazon is going to have with the amount of devices they have if they just start sharing everyone's internet and sharing it. It's scary to think about where that goes when you realize that people aren't doing it intentionally. They're not even sharing it intentionally. And what they get into a little bit more is that they talk about third party, okay, why people are freaking out. Compounding the privacy concerns. Nope, that's the opt-out. So Amazon uses layered security, restricts the amount of data, but every system has bugs, okay? To cover this on the day that we have a massive outage from Fastly, obviously a brilliant company, right? I think the market cap's about $5 billion for that company. They work with some of the biggest companies in the world, but every system has bugs. And if you start talking about one company controlling the ability for their devices to control everybody's internet, and then you have third-party integration as a possible issue. How do you enforce a third party that won't abuse your information, et cetera? We've seen this play out with Facebook, right? Third party. Facebook allowed certain companies that then abused their policies and just took everybody's information and abused it. Yeah, just keep your eye on this one, folks, and see how that reflects, because now the last part, that's as an investor. How do you opt out if you want to? Now, the important thing is here, I got some emails when I talked about it before. It is not the Amazon app that you're going into, okay? It is the Alexa app. They're two separate apps. If you have an Alexa device, that's what I'm talking about for Alexa, which is the Echo, right, and all that stuff. You got to go into the Alexa app. This is within the Alexa app. You go into number one. You go into settings right here. Within settings, you're going to go into, let's make sure we're covering it right, account settings. So one under the other. Settings. Then you're going to go into account settings. Then you're going to go into Amazon Sidewalk, and there it is enabled. You can check that. It'll unenable it, disable it, I should say, and you won't be sharing that. Interesting to see how it plays out just in even public perception, because that, to me, is not something I want happening in any way. On the same day yesterday that you have Apple all about privacy, right? You have Amazon launching the opt-out service that every single device is going to immediately begin sharing your network. And of course, it doesn't, it's going to be a brilliant way to allow people. Imagine that all you need to do is be near a device. Folks, you could walk around your entire neighborhood and probably be within reach of some type of Alexa device, especially if you're in a city of any sorts or stuff like that. Even out in the country, if you're in like a development where you got houses everywhere, you got Alexas, Echoes, Rings, all that stuff everywhere, where pretty much you're tied to everything. Take it for what it's worth, but more people should be aware of it. And the reason why they have it as a opt-out service is because they know that most people will be unaware of what's going on in their own house. And now you're going to be losing your own bandwidth. There's going to be people they talk about in there that maybe they have limited bandwidth somehow in a low budget type internet service plan. And maybe you use that up. There's a lot of stuff that could play out. But nonetheless, folks, Jeff Bezos, he's going to space next month, and Amazon's up 1.2% on that. Look at that pop. Stay tuned, folks. We'll be right back after the break.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Markets can rise and fall like the tides. Subscribe to Basil Chapman's newsletter, The Opening Call, and you too can ride the wave. Basil Chapman is an authority in technical analysis. His Chapman Wave trading system has been helping traders identify trends and capitalize on momentum in the markets since 1984. TFNN invites you to test Basil's proprietary Chapman Wave trading methodology with a monthly subscription to the Opening Call newsletter for only $149. Your subscription to the Opening Call comes with a 30-day money-back guarantee, as well as daily market updates on key indexes, stocks, and commodities. Ride the wave. Sign up for the Opening Call risk-free today.
Introducing Primal Edge.
Today, it's even more important to take a supplement that complements your health. Primal Edge is specifically formulated to boost your immune system and help with weight loss, better sleep, stress reduction, and the need to detox.
Our early ancestors found all their nutritional requirements in the wild environment. But today, our food sources don't contain the vitamins, minerals, and nutrients that we need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based, vitamins, minerals, fatty and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated humic and fulvic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, without them, life cannot exist.
That's right, Ellen. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, just $89, exclusively at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. S&P is actually in the negative right now by about 3 points. NASDAQ 100 up by 49. Jumping around the story yesterday, how about Biogen? So their Alzheimer's drug, FDA approved. This one, interesting when you get into it in terms of a binary choice of approval or no approval. They really got it across the board, as in they were looking for approval for early stage. It's approved for across the board. And, you know, this is really the first time that I was digging into it yesterday. They've had quite the volatility with this stock when you back things up. Yeah, I believe it was in late 2020, you had the stock spike higher when it first said that things were back on, but then it was short-lived, thinking that it might not get approved. Yesterday, it is approved. And what it has to do with is that the studies have yet to show substantial slowdown, unfortunately, of dramatic impacts. But what it has shown for sure is the decrease of the proteins that many people believe do cause. And those are amyloid proteins, I believe it is. And this segment, folks, deserves a lot more than 3 minutes. Encouraging stuff for any Alzheimer's patient, I'm sure, out there when you haven't had a drug come out in the likes of almost 20 years for that illness and ailment. So nonetheless, the next story that we're going to have to dig into, though, is the price tag, which is about $56,000 for each treatment, well above what a lot of people in the industry were thinking. And that comes with even more than that, because you have to go through a number of scans on a continual basis to make sure that everything is okay. The cost pretty substantial in a big way as that plays out. Nonetheless, a persisting theme, right? Talking about some of these drug companies and their prices that they rationalize they have to do for research and development. An understandable argument. On the other side of that, you have to have patients that have access. And you're talking about quite a price tag when they're going to be the only player in the game, unfortunately, for patients in that situation that they can turn to. So they'll be probably the one that basically gets applied across the board, which is why you saw their stock yesterday spike to $368 today, giving it back a bit. But you're talking about up $100 from where we were yesterday. You pull up the Analyze tab real quick as we wound out. You're talking about a $58 billion company right now at $383 for Biogen. All right, folks, stay tuned. We got a little bit of a reversal. We get the S&P right now negative by 4. We'll finish it up with notes, holding steady at 132.12, up by 9 ticks. We got the 10-year yield about 1.54%. Stay tuned, folks. Basil Chapman, he's up next. Don't forget about Dave's webinar course, folks, next week. Check it out.